Good to see you, Peter.
Good morning.
Okay, well, let's talk about these stress tests first off, because that's the big headline this morning with the CBRC telling banks to test for a possible 60% drop in residential property prices on the mainland. Is that plausible in your view?
Oh, absolutely, in my view. Absolutely. Affordability in China right now is stretched to levels that we've never ever seen before. And I know one of your guests earlier said a 60% fall is implausible. I'm afraid it is. We've seen property prices here in Hong Kong fall in the last 30 years, twice down 70% over the course of a down cycle. Given what we're seeing in China right now, the massive oversupply that you're seeing in many of these cities, the bubble that's happening there, the rampant speculation, I wouldn't be surprised to see prices in many cities fall 40–50% easily.
Okay, well, let me just counter-argue that, because a lot of people see that there's a lot of cash still being held by mainlanders, and there's this push to the urban cities, so there is a need for housing, and there's enough money to pay for it. People are not taking out loans. It's not a subprime issue there.
No, it's not, but there is a subprime issue brewing. As we know, many of the banks have actually sold on many of their mortgage loans to trust companies and insurance companies and pension funds. That is basically the same thing that we saw in the States in the subprime issue. It's not on the scale of the US, for sure, but we are definitely seeing it. And the massive amount of oversupply, huge swathes of property are being held by speculators. It's empty. It's sitting there. No lights on, no telephones connected, nothing. And that is, of course, a major risk. And I think the CBRC is absolutely right to be really encouraging the banks to take a close look at this.
Yeah, to test for the worst-case scenario then. Okay, let's talk about Churchouse, shall we? Because everyone's watching out for what Li Ka-shing's company is going to report later on today. And as you heard from Paul, it looks like a lot of these property sales will be booked in the second half, so the first half might not look so good.
No, that's absolutely correct. Much of what has been booked in the first half will be property that was sold perhaps right at the worst part of the market in 2008, 2009. And the resurgence of prices we've seen in the last few months will probably kick in the second half of this year. So I think Paul's absolutely correct. But again, I think what's more important is the outlook and what can we expect in the property market going forward over the next couple of years. And I think it is certainly questionable here that we have a little bit of a bubble going on, particularly in the high-end market. Not so much in the mass market, but certainly in the high-end. But we've got to face it, that only represents less than 3% of the total market. So really, should we be worried about it? Probably not.
Really? Probably not? Even though the bubble might burst, there is
in the top end of the market, the top end of the market, it's affecting a very small number of people, and it's not really affecting the banks, because much of that top-end property is bought with cash or with very small amounts of borrowing. So it's really the mass market, the under 10 million Hong Kong dollar, 5 million Hong Kong dollar. That's the market we really need to look at to see if we really are seeing a bubble there.
Okay, well, you know what's missing in all this discussion about property and on Li Ka-shing days is Swire Properties, which owns a portion of Cathay Pacific. I think it's a majority owner in Cathay Pacific, but they also have a huge property section as well. In fact, they scrapped their IPO, their multi-billion-dollar IPO this year because of the market conditions. What are you expecting from Swire, and do you think we'll see a revival possibly of the share listing?
Well, I think certainly with Swire, the airline has done extremely well. We've seen the first half numbers pick up dramatically, and they typically get even better in the second half. On the property side, much of their income comes in from, not from property sales, but from rents.
That's right.
And again, it's a lagging indicator, but office rents are up 15 or 20% in the last couple of months as we're seeing vacancy rates come down. So I think you'll start to see the office market kicking back into their earnings in the second half of this year and into the first half of next year. That, I think, will be a significant kicker for Swire going forward, as well as the earnings from the airlines. The property sales business, it's not such a big business for Swire. The more important for them is the rental business. Okay,
so I'm going to ask you a layman's question before we go, Peter. What about property prices here in Hong Kong? How much are we going to see them gain this year? 38% since 2009.
That's
do you think
correct.
Most of the increase has already been priced in, or do we have ways to go?
I think we've still got a little way to go yet, for the simple reason that we've got very tight supply, we've got abundant liquidity, low interest rates, wages and salaries are rising. There are thousands of expats pouring in from places like London and New York to live in Hong Kong. So I think that's going to drive things over the next few months at least, unless the government steps in to cool it down.
All right, Peter, always good to see you.